Hello everyone, welcome back to another episode of the Resistance Support series. In this video, we'll reveal our advanced support and resistance strategy that can completely change the way you use these levels in trading. Support and resistance are among the most popular trading tools, yet many traders misunderstand how to apply them effectively. Make sure to hit the like button, as it allows for our team to continue to produce more YouTube videos. Before we dive deeper, let's understand one of the most important concepts in trading. What exactly is a resistance level? When you look to the left, you notice price go up before it suddenly stopped in its tracks, changed directions, and went downwards drastically. This suggests that buyers and sellers are paying close attention to this price area. The reason price turned lower from this level is simple. Buyers were closing their long trades, while sellers were actively initiating new short positions. That two-step process frequently serves as the foundation for a sharp move in the opposite direction. Before we continue, keep in mind that when we talk about buyers and sellers, we're talking about major institutions and professional market participants who have enough volume to move prices significantly. Since buyers and sellers previously showed strong interest in this area, there's a good chance they may become active again when price revisits it, creating potential trading opportunities. Now what you do is you draw a rectangle zone from where the last reversal occurred and stretch it far out to the right. Whenever price returns to this area, pay close attention for potential trade setups. In this case, the zone acted as resistance and offered a solid short opportunity. So what exactly is a support level? When you look to the left, you'll notice that price was falling steadily before finding support, reversing direction, and rallying sharply higher. This tells you that for whatever reason, this area is of interest to buyers and sellers. Because once price reached that area, buyers stepped in with new long positions while sellers began taking profits on their short positions. And that double action is what is required to trigger a drastic move in the opposite direction. Draw a rectangle around the area where the previous reversal took place and extend it to the right side of the chart. This zone serves as a key reference area, helping you identify potential trading opportunities when price revisits it, just like the long setup shown here. Let's see what happens when price clears resistance. When price breaks above a key resistance level, it shows strong buying pressure and a clear uptrend. Once broken, that resistance often becomes new support, creating opportunities to buy pullbacks in the direction of the trend. What happens when support breaks? When price breaks below a key support level, it shows that sellers are in control and the market is trending strongly downward. Once support is broken, that area often becomes a new resistance zone. If price pulls back to this level and gets rejected, it can create good selling opportunities in the direction of the trend. One important thing to understand is that support and resistance are not precise lines. They are areas where price is likely to react. Many traders struggle with support and resistance because they expect every level and every setup to look perfect. But the market doesn't work that way. Price often moves in messy and unpredictable ways, so key levels will rarely look perfect. So you need to learn to trade within these imperfections, or else you'll miss out on 90 of the best trades. Let's look at 3 imperfect support and resistance patterns every trader should know. 1. Price can break a level slightly before reversing. That's a false breakout. 2. Price can reverse before touching a level it doesn't need to be exact. 3. Some support and resistance areas are zones, not lines. Draw them wider when needed. Let's now go through the different support and resistance high-quality types and traits to look for. Type 1. Strong price reversal. Notice how when price reached this resistance area, it dropped sharply instead of moving down slowly. The move was large and aggressive, not just a small reaction. Now look at the support area. Once price reached this level, it quickly pushed higher. The rise was strong and covered a large distance, not just a minor bounce. This tells us that strong buying or selling activity entered the market at these levels. Large market participants are often active in these areas because their orders can create powerful price movements. When price reacts with a fast and powerful reversal, it suggests that the level is important. Type 2. Multiple reactions. When price touches the same area several times and reverses each time, it shows that buyers and sellers care about this level. The more reactions a level has, the stronger it becomes. Type 3. Swing highs and swing lows. A swing high is the highest point price has reached recently. These areas often attract sellers because traders see the price as expensive. A swing low is the lowest point price has reached recently. These areas often attract buyers because traders see the price as cheap. Type 4. Support turns into resistance. Sometimes a support level later becomes resistance, or resistance becomes support. This shows that both buyers and sellers are active around that area. Type 5. Visually obvious levels. These are levels you can spot immediately on the chart. Because everyone sees them, more traders react to them. More attention usually means stronger price reactions. Type 6. Recently respected levels. First, find where the level was created. Second, check if price recently reacted to it again. Third, use it as a potential trade area. A recent reaction means the level is still relevant today. Type 7. Psychological levels. Traders often focus on round numbers like 100, 200, 300, or 400. These numbers often act as support or resistance. Treat them as zones, not exact prices. Type 8. Stacking multiple factors together. The best levels often have several strong characteristics at the same time. For example, swing high, multiple reactions, and a strong move away. The more reasons a level has, the stronger it usually is. Now let's move on to the next topic, drawing support and resistance using wide zones. Before we continue, tell us in the comments what topic you'd like us to cover next. Many of you have asked us to cover news and current market events. We'll be creating more of those videos in the future. Now, when drawing resistance, many traders mark every swing high as a separate level. This creates multiple resistance lines close together. The problem is that too many levels create confusion. Traders start overthinking and don't know which level really matters. Instead of drawing many lines, use one wider resistance zone that covers the entire area. So what you do is instead of drawing in all these separate lines, draw a wide zone instead that captures the entire area. And then you look for reversal price action in the general area for possible short trade setups. Let's show this again. These swing high reversal points draw a wide zone like this. These smaller reversal points draw a wide zone like this. These many reversal points draw a very wide zone. Then your swing lows down here, another wide zone. Let's show this again. So, how far back should you go when drawing key levels? When the price breaks above a key resistance level, there may be no clear price action ahead. That's when you should zoom out and look further back on the chart. Look for previous reversal zones where price changed direction. These areas often become future support or resistance levels. Once price reaches the level, watch for confirmation. A candle color change and a strong bearish candle can signal selling pressure. Key support level price comes down multiple along with candles at support presenting a long trade setup. This can be a good area to take profit or look for a short setup. Notice how price reverses around the same area, but not at the exact same level. That's why professional traders use zones instead of thin lines. In this example, we have a potential buy setup. First, the market is already in a strong uptrend. Third, after entering the zone, price confirms a trend change by breaking a trend line. This gives traders a higher probability entry with better risk control. Using multiple time frames can help you find even more precise entries. Let's break down this trade setup step by step. This trade was found on the 4-hour chart. Notice that price reversed several times in the same area. Since the reversals are spread out, we use a support zone instead of a single price level. Why this creates a potential buy setup? 1. the larger trend is still bullish. 2. This support zone has been tested multiple times. 3. When price enters the zone, we see inside bars and long rejection wicks. However, a reaction alone is not enough to enter a trade. Price can still break below support and continue falling. That's why we need more confirmation. So you need to look inside of this candlestick reaction area, but on a lower time frame, to find any form of price action that signals a trend change from a downtrend to an uptrend. Now let's switch to the 1-hour chart. On the left is 4-hour time frame we just looked at, and on the right is the 1-hour time frame. The support zone remains unchanged and continues to hold price above key levels. However, if we zoom in and look closer at the price action, we can see more valuable information. Price is currently moving sideways while gradually creating higher lows. This often forms a sideways channel or an ascending triangle pattern. These patterns suggest that buyers are quietly accumulating positions inside the support area. Even though price is not moving aggressively higher yet, buying pressure is slowly increasing. As long as support remains intact, buyers continue to have an advantage. The key confirmation comes when price breaks above the pattern and creates a new higher high. Once that happens, it signals that buyers have taken control and a bullish trend shift is likely underway. This is where traders look for a precise entry. Now here's a bonus technique. Place a trend line below the moving trend of your current long position, and if it breaks, you should know what to do next. If you're a Paradise Trading Tips member, now let's move on to another powerful trading strategy, trading imperfect entries beyond a key zone. Many new traders believe price must reverse exactly at support or resistance. In reality, the market doesn't always work that way. Sometimes price will push beyond a zone, attracting breakout traders before suddenly reversing direction. This is what we call a false breakout. The reversal point creates an important reference level on the chart. As price comes back, it breaks through the level. But how can you tell if it's a real breakout or just another trap? You need to look for trend change price action, which you had through the lower high and lower low, and price breaks back below and presented short trade opportunities. If the breakout had been genuine, price would normally pull back, retest the level as support, then continue upward to create a higher high. False breakouts can be extremely powerful because they trap breakout traders on the wrong side of the market. So once price reverses, all those long traders have their stop losses hit, which results in a massive bearish momentum candle like this being formed. This creates additional selling pressure, often leading to a strong bearish momentum move. Now, if you want access to a ton of advanced content that won't ever be made available on our YouTube channel, go to Paradise Trading Tips.